It was the tale of two retailers today as Loblaw and Canadian Tire reported fourth quarter results. Loblaw missed as it continues to shadow box with Walmart, which has been building a grocery business in Canada. Profit at Loblaw fell to an adjusted 43 cents a share, missing estimates by 11 cents and down 26% from a year ago. The company was also hit by two downgrades from S&P and DBRS, but it was like night and day at Canadian Tire. Net profit at that retailer, which also counts Walmart as a competitor, was up 15.5%. The company also boosted its dividend and announced a buyback. For reaction, we spoke with consultant Pennycooke of the Lakeshore Group, starting with Loblaw's miss.
Not surprised, as usual. I'm rarely surprised on this story. Here's a hot tip. I think this company is going to be sold in the next 3 to 5 years.
To whom? Private equity?
No, it'll be one of the big supermarket players in Europe, like Tesco or Carrefour or Royal Ahold out of the Netherlands.
Why wouldn't Weston simply take it private?
It doesn't seem like they've got the appetite anymore for this game. It seems to be just a disaster.
A disaster. That's a pretty strong word. They still made a profit.
No, they did, but look how far they've dropped from the halcyon days that they had, a decade ago. It just seems that the ship is rudderless, and I'm afraid that we're going to be seeing declining profits and missed expectations as we have in the last couple of years.
How long can they keep up the kind of price cutting they've been doing?
Not very long. I mean, you and I both know how thin margins are in the supermarket game. I think their Christmas approach of offering $10 off $100 purchases was a huge mistake because people could use that $10 on anything, and if they used it on low margin items, that was going to hurt them, and it looks like that's what happened.
What about the cost cutting? How much more can they get away with, and will that help?
Well, you start to get thin if you start losing your staff and pushing other things. You can try to squeeze the suppliers like Walmart has done, but there's only so far you can do that. I don't think that their success or their return to the previous years is all related to the cost-cutting side.
Any signs at all of a turnaround? Anything stabilizing?
I don't see it. I just see it as they've just lost their focus. They don't have any more cachet like they used to. I think the other supermarket players have really caught them, and having a bagless store or being green is all very important, but that's not going to drive people into the store.
What about Walmart? Do you like their grocery offerings?
It's decent. What they have is the perception that they will always be a price leader.
Is it true?
It's not all the time. You have to look very, very, very closely. But I think they've been very smart, and people don't question Walmart's prices when they should. But it's a very decent offering, and I like the way they've laid out the store, where you really feel like you're in a supermarket when you're up and down the aisles.
But they have so few relative to Walmart or relative to Loblaw.
Yeah, I mean that's the important aspect right now. They've got to roll these things out a lot quicker, I think, than they have up until this point. I think what they're running into is a lot of municipalities are putting a lot of approval pressure on them, making them change the format of their buildings, making them put green roofs on, and that slows down the rollout of the physical plant of these stores.
Let's turn to Canadian Tire, the other major retail story here today. What are they doing right that Loblaw isn't?
Well, they've stayed with what they knew best and have simply fine-tuned their game. I think one of the really good moves that they made was to take Canadian Tire to be more female-friendly. In the design of the stores and in the offerings, they've linked up with Debbie Travis, which I thought was a brilliant move. She's very popular amongst women, and has brought in Debbie Travis paints and home furnishings and fixtures. It's a really attractive place, and a lot of women are shopping in Canadian Tire. It's not the Canadian Tire of my younger days when I used to go there for my bikes and hockey equipment.
So what about the company that is giving so much trouble to Loblaw, Walmart? Could it be viewed as a threat to Canadian Tire too?
It's certainly a competitor, but Canadian Tire does really, really well on the automotive side, and I don't think they're going to get touched by Walmart on that. They have a large floor space devoted to those things, a depth of merchandise, and their private label brand is well trusted, the Mastercraft side of things. So I don't think they have to worry that much. With the balance of the department store goods or the general merchandise goods, I think Canadian Tire looks at Walmart like any other competitor. They watch what they're doing, but they're not worried about them.
What about the earnings? 15.5% increase in the quarter for the year, more than 17%. Those are big numbers to maintain.
They are. Again, I'm not a financial analyst, but those are big to maintain. But Canadian Tire is pretty aggressive with rolling out new stores and closing underperforming ones, and I think that there's still some room in the market for them, in the Canadian market.
Just quickly to finish up, if there's a recession that spills over from the U.S., which of the two companies is most vulnerable and why?
Between Canadian Tire and Loblaw?
Yeah.
I would have to say Canadian Tire. There's a little more discretion to the items that you buy there. Everybody needs food all the time. Loblaw would always still have that, but they have their other competitors that have just stayed with food, and Loblaw would be carrying all of their non-food items. So a recession would be hard on them as well.
All right, we'll leave it there, sir. Many thanks, Rick.
Good to be here, Howard.
Thank you. Rick Pennycooke, president of the Lakeshore Group. And now the U.S. and the retail reality there, with free-falling home prices, sky-high fuel costs, and constant recession talk. American